Hey everyone, in this video we're going to go over Snapchat. It's down 25% in after hours about. We're going to go over their Q3 2021 earnings review, which just came out, their investor presentation. But before we get into it, if you could smash the like button, it really helps the YouTube algorithm. And if you haven't subscribed to the channel, definitely subscribe. So before earnings dropped, Snapchat ended today at $75.11 a share, a market cap of around $120 billion, and after hours, after the earnings, the stock basically cratered. It was down to like $54 and change, which was about 30% discount compared to where it closed. Now, at the time of the recording, it's down around 23.3%. It has made somewhat of a recovery, but still down significantly. And this drop followed to other advertising social media companies. So Facebook, after the Snap news, dropped about 5-6%, I think maybe 7% at its peak, slowly recovering as well. Now it's down about 4.7%. Twitter also was down like 7% to $60 from $65. And it's also slowly recovered. It's down about 3.5% in after hours. But basically, all social media, all advertising on iOS, basically companies, were down in after hours after Snapchat reported. And it's mainly because Snapchat brought the point up about Apple's software and how it's going to be harder to advertise and to make money advertising to iOS users, since with Apple's new software, you can't track users across apps. We knew this was coming, but now it's, as it comes, there's a lot of uncertainty, and the uncertainty kind of pushed the stock down, especially when they're talking about guidance. Now let's get into this presentation. The first page basically shows Snap saying that it's a camera company, basically above everything else. They say, "We believe that we're reinventing the camera, represents their greatest opportunity to improve the way people live and communicate. We contribute to human progress by empowering people to express themselves, live in the moment, learn about the world, and have fun together." So they have always made it a point they are a camera company rather than a social media company. But that said, they are a social media company as well. Strong growth in their community, 306 million daily active users on average. This is basically an insane number. 306 million people use basically Snapchat every single day. This isn't monthly active users, this is daily. And as you can see, quarter by quarter, that number has increased. So they do have nice growth in the US, like in North America. They're at 96 million daily active users from a quarter ago, 95 million. So slowing growth, but they're really focused on international growth, global growth. High penetration in most established markets. They have 90% of the 13 to 24-year-old population. I mean, that's an incredible statistic there, and 75% of the 13 to 34-year-old population when it comes to the US, UK, Australia, France, Netherlands. So in established markets, they're basically dominating as far as consumers using their platform. Now, consumers can use other platforms on top of theirs, but 90% of that age group using their platform at such a young age is a great statistic, because if you get them early, you can hopefully keep them for life. Significant opportunity to globally expand our community. So in North America, 24% penetration, 96 million daily active users, where there are 400 million smartphones in North America. In Europe, they have 14% penetration with 80 million daily active users, but there are 560 million smartphones in Europe. And the rest of the world, they only have a 5% penetration, which is 130 million daily active users, and that's out of the 2.4 billion smartphones in the rest of the world. So obviously there is a lot of opportunity to expand on a global footprint. International growth playbook they put out here. So local language is important. They have 35 languages currently supported. Local lenses is important. So unique lenses, 2 million plus lenses launched, 200,000 active lenses created by creators globally. Local content, 400 plus international content partners, 19 countries internationally. There's local marketing, so to generate awareness through local marketing initiatives, and local partnerships, so preloaded partnerships with major OEMs in the handset space, which provides basically placement and promotion. This includes Samsung and Vivo. They also have partnerships with local telecompanies, ensuring attractive data ratings and promotions. Now, the next thing they show is basically a decade of innovation. They just came on 10 years of being a company, and since 2011 when it launched to 2021, each year they have done a lot more. So like in 2012, they made Android Video, 2013 Stories and Smart Filters, and as you can see, year by year, from 2014 through 2021, they have launched more types of innovation and products and R&D projects, etc., to market year by year. This is not each year showing like everything from before and then new things. They're all new things each year. So the pace of innovation is pretty great. The Snapchat experience, there's 5 core platforms. There's the map, communications, so chatting with people, the camera, stories, and there's Spotlight for finding new things, etc. Now, the camera and augmented reality is extremely important to Snapchat. So the Snap camera drives visual communication between Snapchatters and can understand, interpret, edit, and augment a scene in real time, which is enabling next generation computing. There's 200 million plus Snapchatters engaging with AR every day on average. Snapchatters play with AR lenses 6 billion plus times per day on average. There's machine learning lenses. There's scanning lenses, so they're showing an example of like scanning a bottle of wine, seeing what it is to be able to buy it, and there's local lenses. Communications is extremely important. The communications platforms where Snapchatters express themselves through pictures, messages with their closest friends, being able to basically text each other and send each other things. There's 39 games, 15 minis available. You can chat, play games, and basically these things called minis as well. Then we have stories, where friend stories basically enable our community to create and share pictures and videos from their day with their friends on Snapchat in chronological order. Now discover features curated, professional content from hand-selected partners as well. There are 700 plus partners in 20 countries around the world. 15 partners reached more than 50 million Snapchatters in Q3 of 2021. So for example, there's friend stories you can see. It's showing in that photo, someone's going on a road trip and their friends see that they're doing that. And then there's obviously the Discover tab where you can see all different types of stories from creators, etc. The Snap Map, also a really important part of the app, which is basically a personalized map that connects the community with their friends, with the world around them, place listings and stories posted by their community. So 250 million Snapchatters use Snap Map every month to find people and places that mean most to them. 30 million plus businesses are on the map for our community to discover. So there's Map, My Places, Layers. I think this is a great idea, basically, and has a lot of potential to monetize in the future. They then have Spotlight, and Spotlight surfaces the most entertaining snaps created by the community and provides a destination to share user-generated content broadly on Snapchat, while remaining aligned with our privacy by design approach. 100% plus increase in content submissions versus the prior quarter, so this is a very fast growing thing. Spotlights are available already in 150 plus countries. So this is obviously something that Snapchat is really paying attention to and trying to promote and expand. Then we have the partner ecosystem that they get into. Now, an overview of their partner ecosystem, basically for creators, there's Spotlight, there's the camera/augmented reality. For publishers, there's the Discover. For developers, there's SnapKit, there's games, and there's minis. Then you have the AR creator community, AR for augmented reality, and their AR communities made up of creators from over 200 countries and territories who create a wide variety of AR experiences across geographies and cultures. So 200,000 plus Lens creators have used Lens Studio, their AR, developer basically platform. There's 2 million plus lenses made by the community. So this is a pretty important metric that it is a growing and very vibrant platform, Snapchat, and their lenses and creating lenses. The Lens Studio, the AR creator platform, they provide a broader creator community with the same tools used internally to develop AR lenses by offering them access to Lens Studio, which is an easy to use yet incredibly powerful AR development platform. So you can do different lenses which incorporate AR. It says the Lens Studio features simple templates for 3D models, as well as materials, scripts, and presets to help creators build lenses. V4 introduced 3D body mesh, advanced cloth simulation, connected lenses, visual classification, audio capabilities for Snap ML, and other features basically Snapchat is giving the tools that they use to make filters to developers to make the platform just a more broader platform and have more people creating amazing things on it. So I think that's really awesome. Now the next thing Snapchat gets into in this investor presentation is the Spotlight creator community. So throughout Spotlight and our powerful creative tools, creators can develop content, reach millions of Snapchatters, grow their audience, and connect with fans, all in accordance with their privacy standards, of course. So there's tools, the Story Studio, Spotlight on the web, there's monetization opportunities, so you can gift, creator fund, Spotlight challenges, creator marketplaces. So they are really innovating on different ways to monetize for creators, and obviously to make money out for Snapchat eventually too. There was 140 plus Snap Originals series launched to date, 70 plus partners to make those series. So they have high quality, award-winning content made for mobile. This is, pretty impressive how well they've done. I mean, we saw other mobile content companies totally fail. So, Snapchat is actually succeeding in this. They're doing a great job creating content for mobile platform and doing it with great partners. So that's pretty awesome as well. Snapchat has SnapKit. Over 1,000 apps have been integrated with SnapKit across 7 different kits: Camera Kit, Creative Kit, Emoji Kit, Login Kit, Ad Kit, Sticker Kit, and Story Kit. So they have a lot of different kits that other apps can use to do different things, to extend the reach of AR with the camera, to allow developers and partners to share dynamic content from apps into Snapchat. Their Bitmojis, obviously, as well. And then they basically just get into the advertising business, which is extremely important for the investors. So they start with saying, meet the Snapchat generation, 150%. The Snapchat generation is 150% more likely than non-Snapchatters to prefer to communicate with pictures over words. 3x. Snapchatters are 3 times more likely than non-Snapchatters to say they are using augmented reality more than they did last year to try on products. And 1.4x, the Snapchatter generation is 1.4 times more likely than non-Snapchatters to gravitate towards immersive video and mobile games, including AR experiences. Now, why this age range is critical, they say, there's many common milestones in a person's life between 13 and 34. They show how between those ages you get your first car, you graduate, you leave home, you're moving, your first credit card, you start your career, you have vacations by yourself, you develop brand loyalty, you get married, you start a family, and you buy your first home. Usually all these major things that happen in your life happen between 13 and 34, and that is the people that are most using Snapchat. So you really have Snapchat really has a great way into your life to help you make those decisions with ads, really. Now, deep domain expertise in key enterprise verticals, they say, between basically all these different things: apps, automotive, commerce, consumer packaged entertainment, health and government, restaurants, retail, tech, telecommunications, financial services, and travel. They basically partner with tons of brands and really have a great insight into these different types of verticals. So that's important for advertisers to know that they have experience and know how to target these things. Creative ad formats that deliver results, so not just generic ads. They have things like within the camera. You can have an advertisement through an AR lens experience or a filter. They have great, extremely short 6-second commercials that are kind of like a forced view. You see it whether you want to skip it or not. It's so short. Story ads, collection ads, Snap ads with app installs to download apps, and dynamic product ads. So they basically are saying that they have creative ways to get your ad in front of a consumer that will be more likely to interact with your ad. Now, significant daily active user and average revenue per user opportunities. This little chart they made here I think is really interesting. In North America, they have 95 million daily active users. Twitter has 37 million in North America, and Facebook has 195 million. They show how long they've been around: 10 years versus Twitter at 15 years and Facebook at 17 years. Now, although Snapchat has so many more users than Twitter in the US, their average revenue right now is less than Twitter and Facebook, so there's a lot of room to grow. Snapchat currently makes $26 of revenue per user. Twitter's making $66 of revenue per user, whereas Facebook is dominating with $256 of revenue per user they have. So Snapchat basically is really in the early days of ARPU, and they're basically saying, look, we have more users. Once we can increase the dollar amount, get to a place like Twitter at $66, let alone Facebook, since we have so much more users, we're going to have an extremely high revenue number by then. Now, the opportunity to expand their market share, they feel, is extremely, extremely large because Snapchat comprises less than 2% of US digital ad market right now, yet they reach nearly half of the US smartphone user market. So they're reaching so many people, but not many people are advertising with them yet because, maybe it's legacy companies just having trouble building on the platform. They're not getting the results they want yet. Whatever it is, there's a lot of improvement to be made there because they have reach, that's for sure. They have the reach. It's just, can they get the ad dollars? Now, Snapchat reaches more than 70% of 13 to 34-year-olds in countries comprising over half the world's digital ad spend. So US, UK, Australia, Canada, France, Netherlands, Sweden, Norway, Saudi Arabia, Ireland, Denmark, Luxembourg. When you take these places, more than 50% of where digital ad money is spent is in these places, and Snapchat reaches more than 70% of that age demographic there. The advertising industry is moving in their direction. They're expecting growth in advertising market combined with secular shift towards digital. So the digital CAGR, 14.3% from 2020 through 2024, they're also expecting there to be an 11%, CAGR from 2020 to 2024 internationally, the 14.3% US and 11% internationally. So they are expecting digital ads to grow pretty well. AR builds consumer confidence, they have found. So over half of Snapchat shoppers agree that augmented reality basically gives them more confidence about the product and the quality, being able to see, there's wrist tracking they show for like having a watch on your hand, seeing it before you buy it. Without going to a store, you can just see it. And if you're going to buy online, it's nice to be able to use AR. You can try shoes on. They say that more than half of people want to use AR technology to assess products. And this allows for a risk-free, try-before-you-buy type of experience. Returns are a $550 billion problem, they say, which AR can help fix. AR-guided purchases led to 25% decrease in returns, they found. So that's extremely significant. As far as growing revenue and scaling efficiently, their full-year revenue, basically from 2018 through 2020, was a 46% CAGR. 1.1 billion in 2018 to 2.5 billion in 2020, which is really awesome. 1.7 billion in 2019. So they are growing revenue really well. Average revenue per user has been increasing in 2018, even though it's so little compared to Twitter and Facebook. 2018, it was only $6.29 of revenue per user. It's now over $10. We saw actually earlier that's even higher than that, but at the end of 2020, $10 in revenue per user. That's a 27% CAGR from 2018 through 2020. As far as infra per daily active user has remained relatively flat over time. That's basically annual infrastructure costs per daily active user. I've never really seen this metric too much, but interesting to see that it's decreasing. So they're spending less on infrastructure costs per user that they gain, which you could assume that with scale. And most importantly, their gross margins are going up. In 2018, they had 35% gross margins and 48% gross margin. In 2019, 53% in 2020. They have like an adjusted gross margin. I'm just going to go off of the regular gross margin. So 32% 2018, 48% 2019, and 53% in 2020. And I'm sure that's even improving into 2021 as well, which we'll be able to see. So that's important as well, that their gross margins are delivering substantial improvements over the years. They believe they have a balanced approach to investments, driving path to profitability. So they say that their adjusting operating expense discipline shown that in 2018, 84% of revenue was basically going to operating expenses. In 2019, it dropped to 61%. In 2020, dropped down to 52%. So they are spending less of their revenue into operating expenses. They're approaching free cash flow break even. In 2018, there was a free cash flow negative of $810 million loss. They had a loss of $341 million in 2019 for free cash flow. And in 2020, that improved to a loss of negative 225 million in free cash flow. And we do know that in the 2021 quarters, we are starting to see now some positive free cash flow, which is great, leading to adjusted EBITDA profitability as well, though. In 2020, we had an adjusted EBITDA profitability of 45 million versus losses prior to that. So things are trending upward. They're not very profitable, this company, but things are trending upward. Lastly, net income is improving. 2020 was a loss, but less of a loss. Now, Snapchat has been strategically acquiring companies. Obviously, as they've become a bigger company, they've been able to acquire at a faster rate. So the later years, 2020 through 2021, they've acquired actually a lot more companies, a good amount already in 2021. But these acquisitions are strategic to help different things. So they put here like they've acquired companies for their camera, communications, maps, games, stories, their spectacles product. They have acquired companies that they knew either had probably talent or different type of technologies that they would need to help advance and quickly get to market different products they want to create. There's now this long-term value creation that they talk about, trying to create this long-term value through executing on their international growth playbook to grow their communities for the long term, invest in innovation to deeper engagement and expand the average revenue per user opportunity, offer a sophisticated ad platform and innovative ad units to deliver return on ad spend for partners, scale operations efficiently and balance investments with growth to drive positive free cash flow, and build conservative balance sheets to prepare for the unexpected and fund the opportunistic. So they basically want to make sure their balance sheet is strong there, which I don't blame them. That's a great basically plan for long-term value creation. Now let's go over some highlights. Snap, obviously announced this is their third quarter. Their daily active users increased 23% year over year to 306 million. Their revenue increased 57% year over year to $1.067 billion this quarter. The net loss improved 64%, and their adjusted EBITDA improved 209% year over year. Their operating cash flow was $72 million in Q3. That compared to a loss of negative $55 million prior year. Their free cash flow was $52 million in Q3, so positive free cash flow compared to negative $70 million free cash flow a year ago. And the common shares outstanding plus the shares underlying stock-based awards totaled 1.7 almost million as of September compared to 1.624 million, went to 1.698. So they did issue some shares because they have to give stock-based compensation, things to employees, things like that as well. Now, this chart basically just shows us revenue. The first part is 3 months, so basically this recent quarter, year-over-year comparisons, and the entire first half of the, not first half actually, first 9 months of 2021 versus 2020 and the changes. So as far as quarterly, we had 57% revenue increase. The net loss has improved for the quarter 64%. Their adjusted EBITDA, 209% improvement. Cash provided by operating activities, 231% increase. And free cash flow being positive, it was a negative before, 174% increase in the quarter year over year. So these are all great things. Non-GAAP diluted net income per share, 17 cents versus 1 cent a year ago. All great things. Now, if we're looking as far as the whole 9 months of the year, there was a 77% increase, higher than 57% for this recent quarter, going from 1.6 billion almost for the first 9 months of 2020 versus 2.8 billion for the first 9 months in 2021. Now, for the first 9 months, there was only a 39% improvement in net loss. So instead of losing $831.7 million in the first 9 months of 2020, in 2021, the first 9 months were only a loss of $510.5 million. Their adjusted EBITDA did increase, though, massively, 341%, from being a loss of $120.5 million, basically, to $290 million or so positive. So that's great. Free cash flow being positive 62 million for the first 9 months versus a loss of 156 million, and net non-GAAP diluted net income per share being 27 cents for the first 9 months versus a loss of 16 cents, which is a 271% increase. So that's also great to see. Now, they did give some outlook. So for Q4 2021, they're expecting revenue between $1.165 billion to $1.205 billion, and adjusted EBITDA is estimated between $135 million and $175 million. Now, that guidance represents an increased revenue, but it is decreased adjusted EBITDA, or at best at the $175 million, it's basically an equal adjusted EBITDA. So the outlook is not great. It's not like, it's okay, but not great. We at FFM do not own Snapchat. We want to make that clear. Part of the reason is the metrics seem high to us, their valuation. They had currently, before this drop, had a valuation market cap of around $122 billion. They had a trailing, no trailing PE because they had a loss, but a forward PE of 130, which is down from the past. But every time we used to look at it, look at that forward PE, 476, 500. They weren't expecting that much profits going forward either, let alone the past. So price to sales, that you try to value it at a different way, and you look at the price to sales, almost 35 times sales. You're just like, it's too high of a valuation, at least for us. And obviously no point to look at price to book, because 42 times price to book is just insane. So whenever we've looked at Snapchat, we're like, look, we like the company. We think they're innovating. We would love to own the stock at a fair price, but we just have never felt that the stock has traded at a fair price for what not just their current business, but obviously like the near-term future. Far out future, there's a lot of companies that could have amazing far out futures, but near-term future was still too expensive. Now that has lost, basically that stock has lost almost a third of its valuation in after hours today, so it is looking a lot more attractive. But even at a 70 billion valuation, we still feel more comfortable personally to buy the dip in ad-driven businesses with Facebook, for example. We know it's not as much loved as a stock, but as a as a company, I should say, but as a stock, an actual just straight up investment, Facebook basically prints cash, and they are trading at a huge discount, very, very cheap multiple, especially compared to Snapchat. Now, the market's worried about the uncertainty of the ad business on iOS devices since Apple released their new software that basically blocks tracking across apps to better serve ads. And uncertainty is one of the things the market hates. So we at FFM Research, we do think this is overblown, that social media still represents the best platform for advertising. And because of that, people will still spend money. Even if they don't get as much of a return, they're still going to spend money. They're going to still increase their budgets, I believe, over time. And as far as analysts that do cover Snapchat, if you're considering the stock, analysts did give it a price target on average of $88, which before the drop in after hours represented a 17% upside. Now that represents even more of an upside, since the stock is $58 a share in after hours, which is below even the low price targets for the person who had a sell rating, which was $67. So it's obviously, if you want the stock, this is a much more attractive time, but we are not financial advisors, so always do your own due diligence, and we personally are not buying the stock here. We are purchasing Facebook though. Thank you for watching. Let us know what you think of Snapchat. Please like this video if you made it to the end, and subscribe to the channel if you haven't subscribed. Until next time.